Welcome to the Profitable Wellbeing Podcast, the podcast dedicated to helping wellness business owners and entrepreneurs better understand their finances and increase profitability. Dream big and create meaningful business plans and plan exit strategies for long-term financial success. Now, let me introduce you to your host, Nicola D. Cross.
Welcome to episode 4 of the Profitable Wellbeing Podcast. In today's episode, we're tackling a crucial topic for any wellness business owner: the secrets to understanding and managing cash flow. Whether you're a beauty salon owner or a holistic doctor, cash flow can make or break your business. It's not just about how much money you make, it's about how that money moves in and out of your business. So if you've ever found yourself wondering why your bank balance doesn't match the success on paper, this episode is for you. I know talking about finances and accounts is a little uncomfortable, but I'm going to break it down to what cash flow really is, why it matters, and most importantly, how you can make it better. So come on, let's do it. Let me start with the basics. What is cash flow? Simply put, cash flow refers to the money coming into and going out of your business over a set period of time. It's about how the money flows in through client payments and flows out through your expenses. Think of it as the lifeblood of your business. Now, there are two main types of cash flow. We have positive cash flow. This is where more money comes into your business than what goes out. You've got enough money to cover your expenses, pay yourself, and ideally reinvest into your business. This is the sweet spot we all want to be in. Then we have negative cash flow. This is where more money is going out than what is coming in. If this happens, it doesn't necessarily mean that your business is failing, but it is a warning sign. You need to address it quickly to avoid bigger issues down the line. Here's the thing, even if your business is technically profitable, meaning you're earning more than you're spending, you can still run into cash flow problems if your income and expenses don't line up correctly. For example, let's say you're going to run a wellness retreat, and you're only going to get paid once or twice a year after the retreat happens. Meanwhile, your monthly expenses like rent, utilities, marketing costs all need to be paid regularly. Without proper cash flow management, you might run into periods where you don't have enough cash on hand to cover those costs, even if you know you're going to have the money coming in at a later date. That's why understanding cash flow is so important, because it gives you the insight into the financial health of your business on a daily, weekly, monthly basis, not just at year end or at tax time. Now that we've covered what cash flow is, let's talk about why it is particularly important for wellness business owners. You, more than any other type of business owner, tends to deal with fluctuating income streams. You might have busy seasons or slow seasons, or perhaps your clients pay for packages upfront, leaving gaps in your income during quieter periods. Wellness businesses often have a mix of fixed and variable costs. Your fixed costs, like your rent, utilities, insurances, now they're going to stay the same regardless of how many clients you actually see. Variable costs, like supplies, think of those products you use on the clients, or paying for additional instructors or assistants. These expenses fluctuate with the level of business activity. This creates an environment where managing your cash flow becomes vital for survival. Let's break that down a little bit further. First of all, we have seasonal fluctuations. Many wellness businesses experience seasonal fluctuations. For example, you might be really mega busy in December for all those Christmas parties, and packed in January with clients when everyone set their New Year's resolutions. But things might slow down in the summer months when people are off on their holidays or busy with family. If you don't plan for these highs and lows in cash flow, you could run into trouble during those slow months. Number 2, upfront payments versus reoccurring income. Another factor is how your clients actually pay you. If you're offering a retreat or a workshop or maybe a long-term program, You might receive big chunks of money up front. Whilst that feels great at the time, it's important to remember that those funds need to last you over the duration of the programme and probably a little beyond. You can't spend it all right away and expect to cover your ongoing expenses. And thirdly, we have unexpected expenditure. Lastly, cash flow helps you prepare for the unexpected. Imagine your equipment breaks, or you need to invest in a new piece of equipment, or you need an IT system or new software for your wellness business practice. With proper cash flow management, you'll have the reserves or a cash buffer to cover these expenses without any financial stress. The bottom line is, if you don't have a firm grip on your cash flow, you might struggle to pay bills, meet payroll, or invest in opportunities to grow the business. And as someone who's passionate about helping others, I know you want to be able to stay focused on your clients, not being worried about cash flow all the time. Now, okay, stick with me here. Remember how I always say, dream big. Well, you've got to understand cash flow to get a grasp of your finances. Now that we understand why cash flow is so important, let's talk about some practical steps you can take to manage it better in your wellness business. First of all, we need to create a cash flow forecast. The first and most important step is going to be creating your cash flow forecast. This is essentially a budget that helps you predict when money will be coming in and when it will be going out of the business over the next few months or even the next year. A cash flow forecast would help you get a clear picture of your financial situation, what it looks like, so you can plan ahead. To start with, list all of your expected income sources. This might include client payments, program fees, your sales, or any other revenue streams that you get. Next, let's list all your expenses, both the fixed expenses and the variable expenses. You can use last year's figures to give you a little bit of an insight into what variable expenses you might have. Now here's the maths bit. Subtract your expenses from your income and see what your cash flow looks like over the coming months. If you spot months where expenses exceed income, you'll know in advance and you can take the steps to address it. Number 2, smooth out seasonal fluctuations. To deal with the natural highs and lows of a wellness business, consider offering services or products that provide more consistent cash flow. For example, you might introduce a subscription-based offering where clients pay monthly for access to a class or for content that you've created. This creates a more predictable income stream during those slower months. You can also plan for seasonal dips by setting aside money during busy times. Let's say you have a particularly lucrative month. You can put a proportion of those funds into a buffer account to help cover expenses during the slower months. Number 3, tighten up on your payment terms. Getting paid on time is crucial for maintaining a healthy cash flow. One way of improving your cash flow is by tightening up on your payment terms. For example, if you currently allow a client to pay you, say 30 days after receiving the service, considering shortening that window to say 14 days or even 7 days, or actually require payment up front or at point of receiving the service. This way you're not left waiting for money that's owed to you. Another idea is to offer incentives for early payments. Offer a small discount for those clients who set up and pay early to settle their bills. Number 4, monitor cash flow regularly. Cash flow isn't something you can only check once a year at tax time. Make it a habit to monitor your cash flow regularly. Set aside some time weekly or monthly at a minimum. This will help you spot any potential issues early on and allow you to make adjustments before they become big problems. There are many tools available to help you do this, from a simple spreadsheet to accounting software like Xero. Find a system that works for you and stay on top of your numbers. Number 5, cut unnecessary expenses. Another way to improve cash flow is by cutting unnecessary expenses. Take a closer look at where your money is going each month. Do you pay for subscriptions, services, or other costs you aren't actually using that aren't essential to the business? Even a small saving can add up over time. 6. Build a cash reserve. Finally, have a cash reserve or a cash buffer is one of the best ways to manage cash flow effectively. Aim to save at least 3 to 6 months' worth of operating expenses. This cash pot will act as a buffer for your business during the times of slow cash flow or unexpected expenses. Think of those times when machinery breaks, equipment's not working, and unexpectedly you get landed with a big bill, reducing financial stress and giving you more flexibility. Aim to save at least 3 to 6 months' worth of operating expenses. This cash pot will act as a buffer for you and your business during the slow times and when cash flow has dipped low, or when you have unexpected expenses. Overall, this will reduce your financial stress, give you more flexibility, and eliminate financial fatigue. Okay, so that was a really detailed intro into cash flow, so thanks for hanging in with me. To sum up, understanding and managing cash flow is absolutely essential to the long-term success of your business. It's not enough just to make money. You need to ensure that the money is working for you, not against you. Your action step for this week is to start a cash flow forecast. Take the time to list all your expected income and expenses and see what your cash flow looks like for the upcoming months. This one step alone will give you an incredible clarity and help you make smarter financial decisions in the future. If you would like my worksheet for cash flow, please send me a message and I'll make sure I email it back out to you.
Thank you for listening to the Profitable Wellbeing Podcast. If you've enjoyed today's episode, don't forget to follow or subscribe, share this podcast and leave a rating and review. To discover more about how you can better understand your finances and increase profitability, dream big, and create meaningful business plans and plan exit strategies for long-term financial success, I invite you to book a discovery call with Nicola at nicoladcross.co.uk. See you again soon.